doing business in Africa. You can't afford to be without Africa Investor.
So now, given everything that we've heard, Sarah, I'm coming to you, and I know that you've got, this forward-looking view, and so I'd be very interested to, and we would all be very interested to understand what you think the next key alignment steps should be for the asset owner industry, working with governments on a mandate-aligned basis to drive, more allocations to African green industrial infrastructure and nature as a globally competitive investable asset class.
So lots of very interesting comments here. The way that what I would add to this is that what is important here is to understand how capital gets deployed at scale, and then how do we build those bridges between the people who deploy capital at scale and the end use of that capital. So let me give you, simple examples, and other people have mentioned similar things. The first is pooling of different assets. So what many people want is to say, well, I have this great project in this particular country, why doesn't somebody invest in it? And from an investor who is investing large amounts of money from their computer in New York or London or wherever they are, it doesn't matter if that's the greatest project in the world, in the greatest country in the world, it's virtually impossible to invest in because it's a standalone project and because the risk will be clear and seen, and if it goes, to others' points, if it goes badly, it will have reputational problems. So how have other people addressed this in the past? What are the basic mechanisms of capital markets to address this? The first is pooling, which is, of course, putting a lot of different things together. And rather than saying, I've got a great project in this country, it's diversification by project and by country into pools where, frankly, the risk is blended and buried. And that is what you're trying to do, right? Put that risk together so that it doesn't attract the kind of attention that it will, which attracts outside attention when things blow up. I'm an investor, okay? I'm telling you how it really works. So people don't like that. So the first...
Blend and bury.
Blend and bury the risk, okay? Blend and bury the risk. So that's the first thing. So think about pooling and putting things together so that people don't focus on that one thing. It's basic portfolio theory. Do you invest in every, if one company in a portfolio blows up, that's okay if you've got a portfolio of a lot of different things. But if you're just looking at that one company, that's probably not okay. So the first mechanism is pooling, putting things together. The second is securitization, which if you can put things together in pools, you can securitize them. And so the most successful example that I know of is the U.S. mortgage-backed securities market. So it used to be in this country that if you wanted to borrow money to buy a home, you would go to your local bank and say, would you please lend me money to buy this house? And they would lend you money and they would keep it on their balance sheet. It was not pooled and it was very local, and if something bad happened in that particular town, the whole bank went under because that's where all their loans were, right? So instead, they were securitized and tranched so that essentially you divide, slice and dice the risk so that people who want low risk buy the AAA, the top, and people who want more risk and more return buy things that have more risk and more return. So my first is blend and bury it in a pool. The second is securitize it, slice and dice it, and try to get it try to get the risk to the person that wants that kind of risk, because everybody wants something different in markets. And then the third, which I think is the biggest opportunity that has been overlooked, is actually the corporate structure, which is, old, tried and true. But if you think about the way the oil and gas industry has been built, the mining industry, the railroad industry, all sorts of obviously the tech industry, we've talked about a transformation that's been completely transformed our economy. Those are not based on projects. Those are based on companies. And so Not that I would want to, but if I did want to invest in a oil rig in the Gulf of Mexico, I would not get on an airplane and fly to the Gulf of Mexico and look for an oil rig. I would, on my computer, buy some shares of BP. And I would let them figure out which oil rig to invest in, how to put those projects together, when to get in, when to get out, how to deploy the engineering expertise, et cetera. And I think that we think about, again, scaling the opportunity to invest in green infrastructure in Africa and other sorts of green projects, having that corporate structure with people who have that real expertise and can deploy capital through capital markets is what we need to do to get it to scale.
Doing business in Africa, you can't afford to be without Africa Investor.